Today, tomorrow, market start accepting below 38,800. Should our directional bias change? 38,800. Okay, 800, 900. So it's this zone basically. Yes, absolutely. If market starts accepting below this zone, so let's say it goes lower and does this, accepts below it, then what it means is that this last point of demand is no longer ready to defend it, right? Otherwise, it should bounce straight away. It should not spend time here. So, and our last points of demand have been moving consistently up. This is the last point of demand, then this one, and this is not yet a last point of demand because it is part of an ongoing consolidation. This is because after forming this HVN, we went higher and formed value higher. So obviously this is our last point of demand, but if it gets broken, market finds acceptance at that. In that case, we can say now that the directional bias has changed. You go to the daily chart, and here you will understand that 38,800 is somewhere here. On this chart, it is really difficult to find out whether there is any HVN here or not. The very obvious HVN that is visible on this chart is this one, then this one, then this one, and then obviously the accumulation HVN. So what I'm saying is that based on the time frame, and I'm not talking about chart periodicity, I'm talking about time frame. Time frame as in higher time frame, where people are trying to hold for longer durations, long swing trades or short-term investors, so to speak. Someone who is willing to hold their positions for more than a week and maybe even for a couple of months, something like that. Like someone who bought somewhere here and is still holding a trade because the trend is strong, something like that. That time frame, if you want the trend to change in that time frame, this is the last point of demand that needs to be taken out, and it is around 38,000 zone. And after that, it is lower. Let us check the level. So this HVN is around 36,200 odd levels. This one is around 35,200 levels, and this main one is around 33,500. Point here is that if you are looking for a change in trend on a higher time frame, this is the last point of demand. So what can happen is market can come down, it can go below 38,800, go further lower, and then what will happen is around 38,000 demand might come in and it might push the auction back up. Then you will probably wonder what happened exactly. What happened was that on shorter time frames, we definitely changed the directional bias. So if the 38,800 level goes, maybe not today, maybe not tomorrow, maybe even on Monday, if it goes, then I will probably be looking at establishing a bearish credit spread. But for me, the main HVN for a higher, for a change in directional bias on a higher time frame is around this 38,000 level. Make sense? So all this 5-6 day composite is what will give me that last point of demand on a higher time frame. So you keep that in mind. What will happen is market will come down. It will come down. Let's say it breaks this level, and on Monday somewhere here, the market is here, and you establish a bearish credit spread, and then it goes lower and suddenly bounces back. Okay, on Tuesday, Thursday, it gives 2 trend days, and your short strike is very close now or underwater already, something like that, and you are made to adjust your position. Then you ask question why it happened. Then when you analyze the chart, you will find out that okay, 38,000 was a HVN on a higher time frame, and that is where the higher time frames have come in, and they are trying to defend the market. So always have that higher time frame in mind, and then that will put you out of harm's way or out of danger for a better part of your trading. Good question, but keep this other level also in mind.